So the market is going to crash and you should save your money for the prices to drop to their lowest, then invest and buy as much as you can, just like in 2008. Wrong. I'm going to share with you the reason why this is a terrible, terrible strategy and what you should do instead. The thing is, if you're trying to time the market, you're really relying on yesterday's data to make tomorrow's decision. And it's not that way with real estate. Prices go up, interest rates go up, things can be unpredictable, and that's never something that with your information and the time that you have, you're going to be able to predict on a regular basis. You know, when you look at where market predictions come from, everybody can always look backwards and see where so-and-so said that the market was going to crash in 2008, clear back in 2004. But things kept running up. People kept jumping into the market. People kept doing things that they had done last year that were profitable, and they continued to push pricing until it was no longer sustainable, and then the market crashed. I look at some of the missed opportunities over the last 2 years because I was trying to time the market, and I realized what a blessing they were because I was unable to get the deal pulled off, and now I have nothing but thanks in my heart that I didn't get that deal. Let's talk about the opportunity cost. Every time you're waiting for the right deal, the best deal, the one that's going to be a home run, you miss out on 2, 3, 4, 5 more deals that could have been base hits. And the reality is getting in the game is much more important than swinging from the plate and crushing it every single time. You know, if you're buying a house every year and have done so for the last 10 years, you're going to be in a lot better position today than you ever would have been by catching a property just right in 2019 and buying 5 that you sold at the perfect time in 2021 to maximize the profits in that period of time. That slow and steady wins the race is definitely the approach you want to take for real estate. But that's because the power of compounding is really in effect. If you're making regular investments and they're cash flowing and you're getting good underwriting on them, you can benefit much more from the long-term growth and appreciation than you can from crushing it in a certain market at a certain time, but only for a short window. The reality is, if you're making consistent bets that are secure, that are underwritten properly, that are cash flowing, you're going to play real estate the right way, and that's for the long term. The other problem you get into is if you're trying to time the market, you're running the emotional versus logic battle. I mean, at one point, you're trying to buy at the lowest part of the market, and you can absolutely sabotage yourself thinking it's going to go lower. And then you're trying to time when's the best time to get out of the market. And you're going to spend so much time and energy doing those things, you can literally sabotage your potential for profits. And second guessing yourself never helps build a positive mindset along with confidence in yourself because you're always wondering, did I do it right? But if you have a strategy and you stick to it, regardless of what the market is doing, they're solid deals, they're cash flowing, they're making you money. Those are always going to be deals that are going to continue in that same vein, and you're going to see success, but it's a long-term game. Let's talk about the ability to find deals. If you're networking all the time, scouting, going through deals, talking to real estate agents, but you're looking for that perfect deal, you're soon going to become the most annoying person that realtor knows, or the worst person that nobody wants to talk to at that networking event because all you do is talk. You're waiting for the perfect deal, and when it gets here, you're going to crush it and you're going to make millions. But come on, guys. I mean, really? The ability to create the network and the ability to get realtors to respond to you comes from your ability to actually perform. They want to invest time in someone that's actually going to look at the deal and buy it. Realtors aren't here for tire kickers. Networking events aren't here for the person that shows up every time talking about, yep, I'm underwriting another one and this one's going to be massive. The reality of all of this is that consistency compounded over time is going to make you a whole lot more money. Let's go back to 2012. Think about the bad times that we were looking at, the times when nobody really wanted to get involved in real estate. Some markets in the nation are up 500% and 700% because of the time that people bought. But I guarantee you the people that have really created generational wealth during those times were the ones that invested in 2011, 2014, 2015, 2016, they were consistent. And in being consistent, they were able to take advantage of a slightly higher price, but still a long runway, a slightly higher price, and even better rents coming up. They were able to do that even in the bad times because they'd underwritten their deals properly and they were consistent in what they did. Now, everybody's talking about how do you mitigate risk? And all of a sudden, you're looking at trying to be on time with the market. Look, market timing isn't something I recommend, but you've got to do the due diligence. You've got to do the research. You've got to make sure that you've underwritten this deal so that you're going to have cash flow. I mean, the last thing you want to do is buy a property that you've got to feed every month for the next 10 years while the market turns around. That's not a proper investment strategy at all. But if you're picking up properties that are cash flowing, even if it's just a little bit, and you're continuing to improve the property and raise the rents and mitigate the expenses, then you're going to be able to put yourself in a long-term position to add value. The other thing I can't say enough is diversify. Don't buy all your houses on the same street in the same city. Look at other asset types. Get into the commercial space. Get into multifamily. Look at some of the other investments that are available and seek the advice of experts. The last thing you want to do is make a decision and be uninformed and only be listening to the voice that's in your head because you may be wrong. Taking into consideration other people's points of view is going to keep you informed and help you to make great decisions with all the information that's available. There's no sense looking back in time to find out if you did it right, because looking forward in time is where you make your money in real estate. So as you guys can clearly see, there are huge risks in trying to time the market. I want you guys to look more at staying consistent, doing your homework, remaining active in seeking opportunities, and taking advantages of the ones that are good and available today. Because time will tell you whether or not you did it right, but the worst thing you can do is sit here and look backwards and see all the deals you could have done, but somehow your market data was wrong and you were trying to time the market. So if you guys are looking for more information on the markets that I'm investing in or am going to be investing in the future, check out this video.